Let's talk more about the markets around the world, the impact of the coronavirus, and how China's homegrown tech giants may be providing that country a lifeline. Joining us now is Ruchir Sharma, Chief Global Strategist, Head of Emerging Markets at Morgan Stanley Investment Management. First thing that I noticed, Ruchir, is the rest of the world is going to outperform the U.S. You're talking about the rest of the world's equity markets or economies?
Yeah, so that's what my note was about the top trends of the 2020s. And the whole sort of pattern here is that this has been America's decade by far. In terms of the American stock market over the last decade has been up 250%. All the other world stock markets on average are up 50, 60%. We have never seen a period of such outperformance of America versus the rest of the world in history. So the American stock market today relative to the rest of the world is at a 100-year high, both in relative price terms and also in terms of the valuations. So the whole point here is that what works one decade rarely works so well in the subsequent decade. That's been the history of the last 100 years. If you look at Japan in the 80s, when you get a parabolic move, all these things tend to sort of fade in the subsequent decade. And so therefore the fact that America today is 56% of the world's stock market capitalization. The American economy is 25%. Huge disconnect. I think that is bound to narrow in the coming decade.
So you're not saying that the U.S. economy on a relative basis underperforms the rest of the world. You're saying that the stock market, which could be based on this relative outperformance the last 10 years in valuation, that it will not. But are you making a comment about the economy itself underperforming the world or no?
Probably not, because I think that America still has enough advantages to keep it going. But what's really sort of shocking here to me is the big disconnect which has opened up in terms of 56% of the world's stock market cap and 25% of the world's GDP.
You talk about populism, nationalism, things like that, which make domestic companies around the world more attractive than multinationals, in your view.
Yeah, so I think that we are in an era of deglobalization. I think it's leading to greater localization, something which we are seeing across markets now in terms of private labels, smaller brands. They're beginning to sort of make a comeback. The same companies which were getting edged out by these large platform companies are now using those platforms to try and sort of spread themselves. And also you're seeing protectionism go up everywhere across borders. And it's interesting in places like China, how the mood has shifted, that 5-10 years ago, owning a US brand in China was very much aspirational in terms of having a global and US brand. Today, when we look at surveys, what they show is that they're rethinking about owning a US brand because of domestic loyalty, the sort of rise of nationalism. So how nationalism, politics, and economics intersect, for me, is fascinating, and China is a classic example of that.
All right. Smaller companies, although, I'll come back for smaller companies, although the top 10 world's largest companies, there'll be new names, and I'm wondering, like who?
Yeah, that's always the question, but here's the history for you. If you look at each decade, the top 10 companies at the end of each decade, in the subsequent decade, if you look at the same top 10 list, 9 out of the 10 companies tend to change, right? So the whole point here is this, that today we sort of extrapolate the top 10 and have incredible faith in these companies. They're dominating, they're a disproportionate share of the global market in terms of their stock market cap. But the history of markets is one of churn. So the last time the US and technology dominated in such a similar way was 1999.
Right.
7 of the 10 largest companies in the world back then were also American and also technology.
Yeah.
Of those, only one today is in the top 10.
Microsoft?
Exactly. Only Microsoft. Every other company has changed. Back then, if you look at it, we thought NTT Docomo, Nokia, those were the behemoths.
Right. That's amazing that Microsoft is able to reinvent itself.
Yeah, exactly. So that's one, though, 1 of 10. All the other companies, if you look at the top 10 list that I gave you for each decade, at the end of each decade, every single decade, 9 out of 10 companies have changed. Microsoft is the only survivor in the top 10.
There.
Amazon wasn't even in the top 100 at the start of this decade. Wow. We tend to forget this in terms of what happens to these companies. Facebook, Netflix, these companies were not even, I think, in the top 500.
You're smart, but if you're really smart, you tell us which companies they're going to be this time, and then we could buy them.
The big strategic call.
Can you give me one, Ruchir, that's not there now that will be there 10 years from now? Give me one.
I think it's going to come from
Alibaba. Give me something.
Alibaba's already there.
Oh, it's already there on the top 10.
Top 10. Alibaba and Tencent.
Give me somebody else then.
Alibaba and Tencent are already top 2 companies which are there.
All right, let me ask: is there one that's in the top 10 that's going to still be there 10 years from now?
I suspect it'll be one of these Chinese companies.
Really?
In terms of it, yeah.
No Facebook, no.
I doubt very much if big tech is going to survive the way it is today. That, I think, is one of the calls I've made in my top 10 trends of the decade. That the big 10, in terms of the
Sprint, T-Mobile.
Well, they're not in the top 10 today. Could they come? Possibly.
No, they're not. Anyway, all right, Ruchir. Thank you. He's a thinker.